Forex Focus brought to you by IG. Taking a look at weekend funding rates on US dollar. A really interesting time to be looking at the carry trade, given the heights that US interest rates have gotten to, and then thinking about the 3 days of overnight funding you get from the weekend can create some very large looking overnight funding on a Wednesday for Forex traders. But you do have to keep in mind the different price action risks and the admin fees that can go into it. So wanted to take this really interesting environment for carry trading Forex, take it as a reason to go deep on the topic. Now, first, let's look at what overnight funding rate strategies are. You have an example in front of you whereby Australia is showing a 4% interest rate, which actually isn't too dissimilar to right now. And Japan is showing a 0% interest rate, also not dissimilar. Actually, Japanese interest rates lower than they are in this example at negative 10 basis points. But anyways, in a scenario like this, if you were looking to put on a carry trade strategy or an overnight funding rate strategy, you could buy the higher interest rate and finance that long position in your Australian dollar with a short position in a lower interest rate, thereby borrowing at a lower interest rate and then being long at the higher interest rate, trying to profit from the interest rate differentials between the two regions. So in this scenario, Aussie yen, you would be long that pair, trying to benefit from the higher interest rate in Australia. But there are a number of risks to this strategy. And for this, I want to pull in a real life scenario, the current dollar yen trade. And you can see US rates at 5.5%, Japanese rates at negative 10 basis points. Looks, potentially lucrative here, but keep in mind that admin fees factor into this, and they can, cut into that differential a little bit at 0.5% per year. So, not all that much, but that is a fraction of a percentage point on a daily basis. But then also the bigger risk here is price action, because it's not necessarily being long US interest rates and short Japanese interest rates in a vacuum. And as long as the interest rates don't move, taking that carry trade profit and moving on, no, there's a considerable price action risk. And you look at this dollar yen market that is near all-time highs. It's near highs for the year, above 145. The high for the last couple decades is around 150. And then also look at the price action for the last month or so. This is a market that has moved to the upside from about 138 to about 145. So rounding that all off, that's about 700 pips. And then you look at the carry trade for that market. And yeah, it is, the weekend funding rate is historically high at 6.5 pips to be long dollar, short yen. But this is a market that, like I say, in the last month or so has moved about 800 pips. So you have to take that into account, that the primary mover in Forex market is the Forex prices themselves. And on any given day, that dollar yen can move, 30, 40, 50 pips or more. And so all else equal, that 6.5 pips in weekend funding looks good, but you have to factor in the admin fees and the price action that could potentially create losses there. As the reverse position, being short that dollar and long the yen and having to pay a high weekend funding rate could create profits if the price action moves in the right direction there. Just pointing out here the high funding rates for long dollar positions, but of course, at the end of the day, have to make decisions that makes sense for you and your portfolio here. And just to show a couple of other extreme scenarios, given how high U.S. interest rates are compared to other major economic regions, getting about 1.2 pips from IG's indicative values here. For being short the euro, long the US dollar over the weekend holding period. And then you've got the dollar Swiss franc, which is, almost 2.5 pips. And then you start to get into some of the smaller pairs, but some interesting numbers there at the Swedish krona, the Norwegian krona, Hong Kong dollar, and the Singapore dollar as well. And I wanted to have some of these weekend funding rates in mind while looking at some of the price action here, just to know, if you were looking at, US dollar positions, what the price action has been in some of these markets recently. And like I noted, you're looking at a US dollar that is very historically expensive relative to Japanese yen. And historically, this market has traded between about 80 and 130, right now trading around 145, as you can see, and a lot of potential volatility, even though you're getting that high weekend funding rate. Another one here that can be quite popular is the euro versus the US dollar. And this is a market that has seen the euro lose more than 300 pips since mid-July. But that being said, euro area interest rates are a lot closer to US interest rates than Japan. And for a period of time, people thought that the euro interest rates could surpass the US interest rates, and still very much could, although the US has widened the gap again a little bit to be north of a percentage point on top of the euro area. But worth noting that risk as well. That might not be necessarily, a day-to-day risk. You very rarely have central banks changing interest rates out of nowhere. But if you are, trying to accumulate carry trade profits over the course of weeks or months, interest rate risk is real. You could see, inflation maybe fall in the US and the US central bank reduce its interest rates because they don't need to be so high. Or on the flip side, the euro area could hike interest rates higher than expected at their next meeting. And if you are holding this position, like I say, for weeks or months, and you didn't factor that in, you could take a look at your positions and your positive carry trade could turn negative. But at the moment, getting a little over a pip in weekend funding from being long dollar, short euro. And then finally, wanted to look at the dollar franc, one that is giving you about, I think, 2.5 pips if we just flash back to our values here. A little under 2.5 pips to be long dollar in this pair. This is an interesting one because US dollar Swiss franc is actually at the lower to middle end of its range here. Dollar is kind of beaten up relative to Swiss franc. Historically speaking, this pair has traded between about 80 and 100, right now trading at about 87. So a bunch of different markets for you to look at here, all showing positive weekend carry for long dollar positions. You've got that dollar yen where dollar's at historical highs. You've got that euro versus dollar, which is kind of mid-range, but dollar has been doing pretty well against that euro in the last month or so. And then finally, you have dollar franc, which is at the lower to middle end of its range there, with dollar still showing a positive weekend carry.